out there, happy Monday. Welcome to the show, RHMax.tv. That is a link, also a way of referring to the channel. And I'm your host, Max, and really fun stream today. Got the guys from the Crypto Mindset course on here today, Charlie and DCC, and be going through some fun stuff, talking about Ethereum, talking about PulseChain, some strategic timing, funny enough, around the course and stuff too. And yeah, we'll try to get to some of your questions in the chat as well, and all kinds of fun stuff. Let me say hi to the chat real quick while I give DCC a little bit of time to come back in the green room there. Red Squirrel, number one, as usual. What's happening, man? Damien, how's it going? I like that avatar. I like that. Is that Sonic going to the on the rocket there? Nice. Eduardo, how's it going? DJ Bomber. Hex in Asia is here. I got Damien's there. What's up? Tex Hex, appreciate that, man. Thanks for your support there. Digital Farmer, welcome. Urban Productions better be bullish boy. Well, it'll be it's bullish. It's pretty bullish stream actually. I'll say I think I can confirm that. Pretty bullish. No matter what crypto Twitter says, I think a pretty bullish stream. Cultivate's back here. I see DCC is back as well. Bring him in in just a second. Fallout Zone makes me think of Fallout Boy for a minute, but Fallout Zone pretty cool. What's up, man? And can't wait. Not sure then is Ismail Postal. Can't wait to see PulseX hit 10,000x. Well, I'm with you. That would be some numbers that I would enjoy seeing. That chart just break through, goes off screen, breaks deck screener, doesn't even work anymore. They have to redo the code, all that stuff. So it should be fun times. Anyways, without further ado, we get the guys back in the show. Charlie and DCC, how's it going, guys?
Hey.
What's going on, bro?
You guys are not bullish enough. I heard in the chat they want bulls. You guys got some horns on today? Or you just hanging out? You sipping your tea? I got some tea here. Got some Bombay chai. It's pretty good actually.
We never don't have our horns on.
True. You can't take them off if you always have them on. Something there. I'm not sure.
Yeah. It's one of those things where it's like that meme where it's like the chart's been green for 6 to 9 months, and then we have a tiny dip. It's like, oh my God.
I would like to take this time to say that I'm the only person on this show with a green shirt at all. So I don't know. I mean, y'all looking kind of suspect right now.
True. We're wearing black for pouring one out for our homies.
Yeah,
true. Green. I keep the green in my heart. I'm always perma bull-ish. How about instead of perma bull, perma bullish? I'll go with that one.
Yeah. At worst, we're crabby.
Crab. On the off days, we're crabby, but always green candles coming. That's true. Guys, what's going on? What we got? PulseChain is up, down, a lot down. I think eighth red candle, eighth weekly red candle. I think I heard somebody say before. Ethereum ETF may or may not be. What's the top of mind for you guys going on right now?
Top of mind is just buy the dip for me, which is between, I'm looking at the 60-day cycles, shout out Bob Lucas for finding those in the pattern, but we back tested them on the charts and everything, and they legitimately are a pattern on Bitcoin that basically tells you where the wind's blowing in the rest of the crypto market, right? So we have downside action possible between now and at latest, I would say the 19th of May, but most likely around the 9th of May is where we have kind of the nadir of the dip per se, right? So that's what I'm looking forward to. Just that first 2 weeks of May, DCAing in heavy, wherever price action is at the time is really what we're focused on. And that's why we put the Crypto Mindset course for Q2 instead of at the very beginning of Q2. We put it at the best optimal prices for Q2 so that everybody who jumps in can basically get some really, really good discount on the market. So
talk about that timing. You guys are not only timing the market, timing the courses. How does it tie in? And historically speaking, how has that worked out?
Very profitably for our guys. Very profitably. We could have very easily launched this course. There was a good period of time there where we could have launched it 70,000 plus Bitcoin, and we didn't because we knew it was not the right time. And we usually like to be able to get guys in when the prices or in that within that quarters or at least next 4 months at that lowest, so we can put people in opportunity. Because instead of we get a bunch of recurring students, of course, but we actually onboard a lot of brand new people into the space. So we're trying to put those people. They're always on our mind. They're trying to put those people in the best position so they don't get kind of like shook out of crypto. And so that's usually what happens is you buy your kind of strength in the crypto space is sort of based off of like your first experience, right? Like if you buy a coin and it goes up, you love crypto forever. You buy a coin, you lose all your money, it's a scam. So we try to put people in a really strong mental position, as well as in a big support group, place where they're always going to have questions asked, and kind of like, hey, you guys, it's okay. Someone's there always to hold their hand. And then over time, these little seedlings become, pretty powerful, crypto degenerates.
Yeah. In the last bull cycle, what we noticed, and this is like due to the fact that like, there's a couple of things that happened, which were interesting, right? So like, the first crypto mindset course we ever did was September of 2020. And Bitcoin was about $10,250 at the time, something like that. And in August of that year, me and Miguel were like, okay, we're going to do this. We're going to start up. We're going to kind of, try to build up something really good and see what, how people respond, right, in terms of a product. And when the end of August was coming around, we're like, shit, like we're gonna have to like release this now, because if we wait to release it in October, November, or December of 2020, like our guys are gonna be too late to the market. Like the market's already gonna take off by then. So shit, what do we do? Do we come out with something perfect, or do we go and tell people, what's actually happening in the market right now? And so we decided to just go. And that was 1 month before Q4 of 2020. And throughout the last bull market, for 2020 and 2021, the best buy periods were the 1 month before the start of each quarter. Now, Wall Street was just getting into crypto at the time, right? Or they'd gotten in really in 2019, 2018, after leverage had been passed, at the end of 2017. So they were buying up that dip. Some people say they created, there's a lot of different ways you can look at it, but so it was interesting to see, okay, crypto's more on like a quarterly basis here, but this bull cycle, it hasn't quite happened like that. The way it's kind of going is about 1 to 1.5 months into each quarter kind of tends to be the area that it's going to now. And that's because, in my opinion, the 60-day cycle, it's a 2-month thing instead of a 3-month thing. So it kind of shifts a little bit each cycle for kind of how Wall Street has to play. And that's actually good for Wall Street too, because, they like something that rhymes enough so that people can kind of understand the beat of the musical chairs, but then changes up the beat enough, kind of has an offbeat here and there so that people get thrown off and, they can take their money.
I mean, it's an interesting time just in general. I remember Anthony Populiano went on. I remember seeing him on Lex Friedman. Was this right before? I think this 2019, somewhere through there. 2019, right? I kind of like took a break. I'm like, oh, okay, crypto. Hex is about to come out, all this stuff. And I was traveling somewhere and I'm watching this interview and I'm like, man, this guy's super he's super bullish on Bitcoin. I wonder if things are going to come back out or come back around this year. And then he kind of like, from that point we had the cycle and all this stuff. And then now the last few months, especially since the ETF, you see him like, he's just like on CNBC all the time. You got all the guys, you got Michael Saylor, you got everyone, even not just at the conferences, but like on like TV shows, like live news stuff and all that too. Clips everywhere. Can't get enough of them, all that stuff. It's an interesting time in crypto in general. We just had the ETF, and now with Ethereum, I mean, you've had all the regulatory stuff, all the privacy. Richard's been tweeting about the KYC and internet stuff. I did a video to like show people like how to respond and use AI to generate the stuff and like try to contribute towards like not getting all of our freedom taken away. It seems like a good idea from time to time. But I'll let that happen. From time to time, if you got a few minutes, you got 5 minutes. But just the whole setup of where we are right now, what we've seen the last few months, and then again in May, and then what we saw consensus like come out to the SEC, all that stuff too. What does it feel like as far as Ethereum ETF with? Is it inevitable? Is it like in jeopardy? Like, how do you guys think about like what's going on with it now and where Ethereum is so low, especially like doesn't look like a lot of people are pricing it in if you were to look at that angle.
It's basically right now exactly. So one thing and it wasn't that long ago, right, where we were saying, is the Bitcoin ETF even going to pass? Right? No one believed that, right? And if you actually look at what their game plan is, it was to basically shit on and FUD Bitcoin, make you guys think that it's not going to pass, so they're able to buy up, BTC as low as possible. So that's what's going on right now. It's not going to pass. It's a security. All this FUD that's going around on Ethereum, the fees are going bad, and there's even upgrades for Ethereum coming out. There's like 2 big upgrades that actually could like 100x lower the cost per transaction on Ethereum. That could happen this cycle, actually. One of them I know for sure. One of them, it just depends if they're going to end up doing it or not, right? And whether they're able to fuse them together. But and this, it's not even just sharding alone, but it's just the crazy thing where like they just run this sort of this FUD campaign in order to scare people because they're actively buying. BlackRock's one of the biggest financial entities on the planet, and I believe kind of internally they're a little pissed off right now because they weren't able to be the first Mohican through the door with the Bitcoin ETF. So as soon as that happened, they applied for the same thing that Charlie, I think you remember which type of, it wasn't an ETF, but I think it was almost like a grayscale fund, right, for Ethereum. They try to pass.
Oh, right, like they had an index and stuff.
Yeah. So BlackRock saw that like the way that Grayscale and all these other funds were able to get ahead of them first is because they kind of filed a kind of Grayscale type fund first, and then through that they were able to then jerry rig the Bitcoin ETF through that. And that's kind of what's happened there. Is as soon as they saw that they were going to lose the race, they were going to be the first ETF, and they're now the most dominant ETF anyway. But still, they went ahead and did the same plan that worked for Bitcoin on Ethereum and passed like an Ethereum Grayscale fund, essentially, not through Grayscale, but just for people to understand what it is, a fractionalized share ones where they really couldn't move it and stuff without permission. But from there, I'm pretty confident that it's going to be BlackRock this time around because they were kind of the first ones out the gate to do it. And now there's a track record of this stuff's worked out too. And this has also taken the wind out of the sails of the SEC. It's hard to call crypto a scam when the thing they're saying is scamming only keeps going up and to the right. It's you know what I mean? And then we just had the Bitcoin ETF. I mean, the Bitcoin halving happening, the ETF passing. Bitcoin went from like 900 coins a day to 450. I think on a daily basis, most of these ETFs are buying over 400 Bitcoin a day. They're DCAing 400 to 500 Bitcoin a day,
which is all the mining Bitcoin that gets mined in a day is basically 450 of them. Yeah.
Right. Yeah. So, and I want to say one thing because just reminded me of something, right? Like the exit liquidity of the cycle is going to be Vanguard. Quote me on this, write it down. I'm telling you right now, because Vanguard is like, being an ostrich with its head in the sand. They just don't want to adapt to the new code. It's so crazy because they pretty much revolutionized the whole space with ETFs and mutual funds. And they're the ones that just don't want to jump into crypto, which is pretty hilarious. So they're going to be pretty late. They're going to lose a lot of market share over time because of this really dumb decision here. But they're going to rectify it. But I believe that they're going to come in pretty late and be exit liquidity.
Yeah. Yeah. And there's 3 other things you need to know about the Ethereum ETF. I would say the most important thing is that the CFTC has already declared Ethereum as well to be a non-security, just like the SEC did for Bitcoin. And the reason why you can kind of hang your hat on that a bit is back in Q4 of last year, the Ethereum futures ETF, right? So a leveraged ETF was approved and put on the Chicago Mercantile Exchange, the CME, and that basically was approved by the CFTC. And it wasn't really talked about all that much because like, oh yeah, another futures contract, whatever, right? But the reason why that's important is because the CFTC would get in trouble if Ethereum was later labeled a security. They'd get in hot shit, right? They'd get really deep. And so there's a few people in the CFTC saying like the SEC doesn't really have any grounds to stand on. Now, the number 2 thing that's interesting is Larry Fink from BlackRock said, well, even if Ethereum gets labeled a security, we're still going to go ahead with the ETF. So then the most important thing after those 2 things is the number 3 thing, which is BlackRock's final deadline for an Ethereum ETF, because not only has Larry Fink said it doesn't matter if it's a security or not, we're going to approve it. That date would be August 7th of this year. But also in addition to that, BlackRock has a 276-1 record, right, on wins versus losses of ETF approvals versus denials. So, and the last one, the 276 number, right, that was Bitcoin's ETF. So they were 275-1. Now they're 276-1. They're about to be 277-1, right? And so by August 7th, right, we have that approved. And that, what does that mean? That means it's not sell in May and go away. It's buy in May and DCA through whatever lows we might have in the summer. Right.
Bars, Charlie, bars.
By August, we're going to go up and to the right really, really hard. So, yeah.
Well, what does that mean? So if the approval is in August, I mean, does that mean, I mean, you talk about,
At latest.
DCL, like at the latest. So that the time
only
in
other
between
chance, the only other chance before then is May 23rd, right? And going to DCC's point right there, BlackRock doesn't want to be last. It's the same thing back in January. The final deadline for ARK Invest was the one that got improved. BlackRock's actual deadline for Bitcoin was in March of last year, March of this year, right? So it got approved one quarter before, or one deadline before for BlackRock, because ARK Invest was before them. So ARK Invest final deadline for Ethereum is actually May 23rd as well. So if BlackRock wants to be first, like DCC was saying, then they're going to have to approve it. They won't have to approve it on the ARK Invest deadline. Actually, in that case, they could actually deny ARK Invest and then get Cathie Woods all hot and bothered, right? And go get in August the approval there. So, that doesn't say it's going to happen, but Cathie Woods does have a pretty good relationship with the SEC, so I don't think they'd really want to piss her off too much. But I guess the last thing on that point is, well, are they doing all the paperwork that they've been doing for Bitcoin ahead of the ETF? Because in August of last year, like DCC said, right, a lot of people were like, the ETF's never going to get passed, even though there's a court ruling in favor of Grayscale, whatever, right? September, people were like, maybe. October, like, oh shit, it's probably happening. November, it's like, it seems like it's happening. December is like, it's probably happening. January, Goldman Sachs says it's not happening, so therefore it is happening, And so we'll probably have that same kind of sentiment going throughout the next few months. But we already have the DTCC website, which is where a lot of the ETFs, as they're looking to get approved, list their information. And we've already had, I think, Franklin Templeton, Fidelity, and maybe one more get listed to that site already. So that means, basically everything's in progress, and we should get it now. Ethereum the only difference with Ethereum's ETF is some of the ETF applicants are looking for the ability to use staked Ethereum as part of the ETF to give a dividend and stuff like that, or something along those lines. That's the only difference between the Bitcoin approval and the Ethereum approval, because if they just match the Bitcoin approval and they just say, okay, everything we did with Bitcoin, just take that all over, put it on Ethereum for the ETF, good to go, right? They could do that. That'd be the easiest way to approve it. But if they're looking to have staking in on the first group of ETFs approved, then that's where I think things can get mucked up, really, because that's where Gary Gensler has a little bit of a leg to stand on when it comes to, being able to fight it, which obviously he's going to want to fight it tooth and nail, because that guy's, who he is.
Yeah, because it becomes a pretty big competitive advantage when your fund is a non-dividend versus a dividend on top of it. So it's like, not only does it have like the upwards, the ability to give you all these access on just Ethereum, but on top of that, they're able to get yield on top of that. They're like, wow. I mean, that yield, that's probably like the only knock I can probably say on Bitcoin really is, besides, I mean, regardless or not price go up, that's nice. But it is nice to have a little income coming off of it as well. And people on the equities market, they love dividend stocks. It's a big deal, especially right now with how much people are retiring. People are looking for income. And if they can have something where like they can hold this risky asset that can help kind of lower their cost basis over time, which 4%, 3% cost basis reduction with it, that's pretty high dividend for boomers. But I mean, for me, it's like, bro, that's like it's kind of ridiculous. But regardless, this is also another reason why they've been pushing. This is probably one of the only negative news I could say possibly on Ethereum, that there is a lot of pressure on Ethereum in the foundation to actually pass in the EIP where they would consolidate the number of validators. So basically what they're running into is that they're open. You kind of have like on PulseChain 32 million PulseChain, and then you just keep going from there, having as many of those as you can. Well, apparently, there's so many nodes and stuff like that it could be causing a bit of an issue. So what they're trying to do is maybe increase that to 6,000. In order to be a validator on Ethereum, you'd have to have 6,000 Ethereum to be a validator, and they would just hyper concentrate the validators, which is terrible. I believe personally it's a terrible idea. I understand why they are trying to do that. One, it would lower gas fees a little bit and stuff, because you have all these, you don't have to manually pay all these people out. It'd help big entities out, like Rocket Pool and Lido and stuff like that as well on their end, in terms of like they have much less pools to manage, because I would imagine on something like Rocket Pool, they would have thousands and thousands of pools on there and stuff like that. And then that's a lot of, that's a lot of Ethereum gas fees being paid as well, So I understand it on that side, but it does, centralize it quite a lot. But I mean, it would probably start catching up a little bit to, Bitcoin, I would imagine what's going on there. Cause it's like over time, no Bitcoin or Ethereum, the centralization is happening because of just, scales of industry, basically, of like what it takes, 6,000 Ethereum is no joke. I mean, I think currently right now, we're talking about it like a little over $100,000 to become a staker by yourself on Ethereum. And millions of dollars if you want to be one on Bitcoin. And I mean, a profitable one, not like this LARPing that people are doing with their devices and stuff. I mean, if you have free electricity, it's profitable to be a miner. But if you don't have free electricity, then basically you have to have tons of scale, and you're in this kind of, you're in this scaling war basically against other ones for hash power, effectively.
It's an interesting point too of like what protocol changes can do, because I mean, what if Bitcoin does something that makes it more centralized or otherwise? Like, how does that affect? Does that affect ETFs? Does it affect the product? Do they if there's a hard fork, do they keep the original, or do they spin up a new ETF? Like, how does that work?
BlackRock had a clause in one of their ETF filings, I believe, that said if there is a fork of Bitcoin, they get to choose from their point of view for the participants of the ETF what they feel would be the legitimate chain. So they're not required, like, the network is, right, to be like, hey, which is the legitimate chain? Well, the network will decide. In this case, BlackRock says, no, we'll decide. So they are they're board members on a lot of the biggest mining companies in the United States, like Riot, Marathon, and a few of these others that are like publicly listed. So they have maybe anywhere between 2 to 5% influence in some of these companies, right? So not a lot of influence, not enough to be like, hey, we're going to DDoS and 51% attack the network or anything like that, right? But enough influence to say, hey guys, why don't you miners consider, move, if they were like buddy with Roger Ver, hey, let's go with the big blocks, bro, like back in the day, right? So who knows, kind of what political stance they might take, but they will try to affect it at some level. So I think ultimately the network would win and they would lose. But it's kind of like the gold ETFs that, basically gold can't be traded digitally except for with paper contracts because it's not a digital asset. So they can basically print as many contracts as they want to inflate the supply of gold. Now, they probably will try to do that same thing with Bitcoin. It's just a matter of, okay, will the decentralization of the network be like, hey, no, here's proof of why that is not actually the supply of Bitcoin. That's not the real Bitcoin. So if they ever try to do any of that, pull any of that shit, I think the network, Bitcoin kind of has this like virus fighting effect of the network that at least is kind of our safeguard.
Is that the biggest downside to having ETF products for crypto, is that a lot of the control does literally, and not just like everyone said, oh, and now, corporations own it, or now, big money owns it or whatever. You can say that, but like, what does that actually mean? Like part of what it means.
The ETFs almost have, well, I have to go back and double check this, but like, I think at some point the ETFs will have like 1 million Bitcoin under their control. I think they have almost like 500,000 right now. So which means, 1/21st of Bitcoin supply. Again, not enough to affect it. So like in terms of choosing the angle of the network, but enough to, be like, okay, shit, these guys are involved, like we can't, they bought free and clear off the market.
Well, what is the point where it becomes, okay, like this new feature, we got to think twice about it. Otherwise, this Bitcoin may not be the real Bitcoin anymore, or Ethereum. There may be some hardware where the money tied up in the ETFs and stuff's like, no, we don't want to support that one. Is that like the devs kind of, doing a double take on certain features that could upset the powers that be, that type of thing?
I mean, the only conspiratorial thing I can think of right now where they'd be able to, I mean, it's a little too soon to even think about this, but the only thing I could think of possibly would be that maybe once at some point that the amount of inflation coming out from the miners isn't sufficient really with the fees and everything like that on Bitcoin, that they may possibly, like, this has been a conspiracy theory of mine for a long time now, that sometime in the middle to late 2030s, there's going to be discussions of possibly taking either adding a permanent inflation rate, which I think they're going to copy, Hex to a certain extent with having a permanent inflation rate, but they may choose to be less than 3%, maybe a 2% or 1% inflation, something like that. Or if they just choose to bandage and try to remedy the situation, what they could do is like coins that haven't moved within a 4-year period of time, and that were from back then or something. They'll make huge caveats, basically saying like, we won't take Satoshi's coins, but we'll take some of these other coins. If they haven't moved yet, we'll give them 4 years. Hey, we'll send them messages. They'll do all the stuff. And if not, that BTC will be put right back at the top of the mining bucket to be distributed out again over time, which I think that's probably where we're going to be heading. But that will probably not be until like the middle of the 2030s onwards and stuff. And then after that, in the 40s, I think, I mean, this is really good. This is like how far I've thought of it out and stuff, but sometime in the 40s, that'll run out. I mean, it'll run out pretty soon. I mean, if I'm being honest, because I mean, depending on how they'll set up the amount of BTC coming out, and then they'll have to add eventually an inflation rate, 1 or 2%, 3%, maybe. They won't go higher than the Hex inflation, but just kind of what it is really, because there is, it's like it depends. If it stays a store of value, I think it's perfect not having an inflation rate. But if it does start becoming more of a money and as well as like a store of value, then there is, depending on the school of thought in terms of economics and stuff like that. There's the Keynesian and all that stuff. I mean, a little bit of an inflation is okay, but because it's kind of it kind of forces productivity in the economy and stuff like that. But when you have something that's deflationary net, non-inflationary, it can cause people to kind of sit on their ass and not move capital around, which is bad for the economy as well, because humans are inherently lazy cunts.
Yeah, and then the biggest difference between Ethereum and Bitcoin, right, for the control of the ETF angle, right, is Ethereum has a leader in Vitalik Buterin that, he's actually met with Putin, right, back in 2017. He's met with the United States government multiple times. He's actually met with the SEC back in 2017, and they actually have internal documents saying Ethereum is not a security, and stuff like that. So if he gets influenced to further centralize Ethereum, like DCC was saying before with the staking, minimum stake amount and stuff like that, he could change things enough around to be like, okay, we'll give Goldman Sachs. My suspicion would be Goldman Sachs and BlackRock would be the two ones that try to get the most control on Ethereum. Goldman Sachs is just one of those ones that you always it's like Jim Cramer opposite land, not because they're dumb, but because they purposely put out the wrong information. And so they have said multiple times, we're not interested in Ethereum, we're not interested in crypto. Meanwhile, they had a report in the middle of the bear market come out that said like all about what they think about Ethereum, which was, this is an interesting technology. We're looking into it, and which probably means, we like it, right? So, we know how these guys work, and GS is just famous for, market manipulation, as is JP Morgan. And so, I don't know. I hope Vitalik is strong enough to resist, the powers that be, but
he has a weakness for Japanese women and stuff like that. So his inner weeb might lose one of these days.
I think it's Singaporean ones for him because
right,
that's where he spends the most time. But like, what do you call it? The one thing is, whenever they come out with the guns, or whenever they come out with the knives, that's when people tend to change up a little bit, right?
He is a 10,000 IQ alien, from what I've heard. So he might be a couple steps ahead.
Alien, reptilian? Do we know? No.
You see those memes of him eating lettuce?
No, but that sounds funny as hell. Wow.
But it is double-edged sword where, like, yeah, the governments and, you know, I would say large corporations are getting more power over these blockchains, but as they own more of it, they start caring about it, because now more U.S. citizens own crypto. What are you doing messing around with my investment and my money? And then there's where the shoe drops right there. We're like, there's this kind of, we're in this Goldilocks zone, and as you know, as more Americans start owning more BTC. I mean, this is something me and Charlie have kind of like. I'll say a little something that we've said in the course, just a little piece and stuff when it comes to it. But you know, we did some sleuthing around, and it seems like the United States and China did some little background deal where they exchanged weapons technology for essentially the Chinese mining market. There's always these things like they in theory, yeah, this is allegedly right here, but it seems what happened was, you know, F-35 plans. Oops, how did that fall out of my pocket? Huh, weird. And now China is, you know, developing their version of F-35s, you know, because, you know, if you've ever seen the Lord of War, Warlord, you know, for countries to live a respectable war, someone's got to give them technology so they don't look like idiots fighting, right? Raytheon's got to get them checks, you know. But
Boeing has no morals.
Great.
Yeah, exactly.
Lord of War and War Dogs, great movies.
Yeah, both of them are really great. Yeah. Apparently, the guy from War Dogs, the actual, you know, the one that Jonah Hill plays, was even crazier in person. They toned it down.
Wow,
how crazy that guy was. Yeah, he was like a crazy, and he was way more sociopathic and stuff like that. But pretty insane.
Wow.
Yeah, the dude was on tons of drugs. Like, he was on, besides the recreational drugs, he was on a lot of Adderall and other stuff too as well, and allegedly. And he would like spend his days not sleeping, just on the phone doing crazy stuff. And then, you know, there's a lot of really cool, interesting interviews when it comes to that. But you know, those are pretty great movies. But just to go back 1 second, when it comes to that, this was done, and then, you know, China had a history of like, they'll ban crypto and they'll unban it, but it was more of a tool in order to control their populace and stuff like that, because obviously they were making a lot of money being the largest Bitcoin miners. Jihan Wu, you say that name, like half of Asia shuddered. Basically, with was it AntShares? No, it wasn't AntShares. It was Antfarm. Yeah, with Antfarm. And they produce most of the Bitcoin miners. You know, they had a lot of the hash power, pretty powerful corporation. Why would you? If you know, especially with, like, you know, China's, they're not idiots and stuff. They know where this is heading. Why would you have obviously at least 25, maybe 40% of the market share? Why would you just decide to like seppuku and destroy all that? And I think it was some deals that were made in the background. This is also around the time too where Trump put all these tariffs around, and China basically ran through their whole surplus and stuff. You know, back in the late 2000s, before the 2010s, you know, China was like, I think if I remember correctly, had $2 or $3 trillion in surpluses. Maybe been higher at the earlier in the 2020s, but I mean in the 2000s. But now they're running a deficit for the first time. They ran through during the 2010s to now. They ran through all their surplus, making kind of the String of Pearls initiative, the Belt and Road initiative, and now run a pretty heavy deficit. That's one of the reasons they had to go into Hong Kong, was basically to get dollars essentially and be able to launch ICOs and all kinds of things, because that's these ICOs that Hong Kong are doing are basically just ways for them to get, you know, US dollars into the country and stuff, which they desperately need because they have contractors and stuff that only take dollars. They don't really take, you know, the Chinese currency. So I mean, there's a web of like geopolitical things going on in the background, and this is kind of like how we
none of it's reported, or none of it's reported that much, like in terms of, like, for example, like what DCC was alluding to in terms of like, why did they shut down all their miners and then all the miners pop back up in the United States a year later? You know, like,
that was strange.
Yeah, very strange, you know.
And around that time, it's within 4 months of them really shutting themselves down, you started having Marathon Mining, Riot, and stuff. You started having these little small, because they're relatively very tiny companies to be on equities markets. And
well, look at their stocks, bro. Their stocks, holy shnikes, they have outpaced Bitcoin like crazy. So, you know, if you got BlackRock and these guys being like, hey, we know that this is happening. We have these stocks, we have percentages in these companies, you know, that goes up way more than Bitcoin does it in the beginning of a bull market, end of a bear market, then we take some of our profits that we've had, and then we go and buy spot Bitcoin so we can have, Bitcoin for the ETF, Ponzi schemes at their best. You know what I mean? Like, it's just, it's what they do.
Yeah.
And just to go back on what DC was talking about, the inflation rate and how that may change in the future. That's a really interesting point. I think it just reminded me of when Richard was talking about he said a million times, socially enforced networks of, hey, it's all cool until everyone's like, yeah, maybe we should do something different. And then you get enough people or enough money or enough whatever to do it. And then, all of a sudden you got, if there's not enough inflation, we need to change that. It's good for, whoever's got the power. And that's the whole point. Decentralization is supposed to stop a lot of that. So the pros and cons of ETFs and stuff is really fascinating to think about. Not just the top level stuff. How does this stuff actually happen?
Yeah, because then it kind of goes to like, okay, which ones are actually decentralized, right? It's like, well, Bitcoin, but then when you look at Ethereum and Solana next up for the ETFs after that, you're like, okay, anything political can win on those.
Yes. What is decentralized? What has mostly uptime? There's some uptime issues with some of the L1s as well from time to time. But speaking of fully decentralized and very much, I'm not sure if we're going to get ETF anytime soon, but you never know. One day. Well, Stephen Jones.
Okay, so I'm not going to speak in absolutes, but I'm 99.99999% confident that not only are we going to get the ETF approved by the August 7th, but like if somebody wants to make a bet on that, just let me know.
No, I was leading into getting a PulseChain ETF approved. Sorry.
Oh, I see. And I wasn't saying like you guys. I'm cool to bet it to people in the audience too. Like,
messed up my intro, Charlie. Damn it. All right. Anyway, let me go back. Speaking of ETFs, we're not going to get one approved very soon. But Stephen Jones, you guys are coping so hard at this point. Richard Hart rugged us.
If you feel rugged, why are you still here, brother? Because you obviously still care.
He could have showed up, posted the comment to warn us all, and then left. He could have did that. That would have been a very interesting way of doing it too. But just speaking of that too, PulseChain, what are people, again, this is not a uncommon comment. This is definitely something that's picked up lately since we had the January runs up and down, all this stuff. And then now it's been, like we talked about earlier, the weekly red weekly candles and all that stuff. What are people just not getting about PulseChain? Like what is getting this? Where is the negative energy? Why is it getting redirected into like, don't know what to do? This thing is obviously over. Like, how do you guys think? How do you not be distracted, or what do you think about that?
Go ahead, Charlie. Go ahead.
But yeah, I think we're gonna have two very different kind of angles on this. But like, I think it's due to impatience overall, right? And like people are like, well, I'm down or I'm sideways or I'm a little up since, the last few years. So like, I want to give up and I want to, put it into Ethereum or something, that's a little bit more predictable. That means maybe you did sacrifice a little bit too much, take whatever that percentage is off the portfolio, go and put it in, something else in the market. Good, relieve yourself a little bit. But why did you get into this space in the first place, right? You have to have the courage of conviction. And if you are not really all that convicted in the first place in the asset that you decided to get into during the sacrifice phase, then you kind of in a way deserve to get shaken out. Not that you truly do, but that that's what the market does, right? So I'd look at it that way. But then I'd also say just any asset that's going to do the number of X's that we want with PulseChain, that we saw with Hex, that we're going to see with PulseX as well. You do need like a concentrated amount of liquidity from people who are holders, right? And so the times that we've seen the biggest shakeouts were in terms of sentiment and in terms of where everybody was feeling like this was the first one, I think, in my opinion, like where people were the most bearish was end of November, beginning of December last year, at which, when liquid loans came out, people were like, oh yeah, all these SACs, they're not doing shit. And, people were very bummed out about that. And so I was thinking about it over December around the holidays. I'm like, okay, I got to buy more. Right. And then from January, we went up. And at this point as well, I kind of feel like we're at that. April is November, May is December, right? And then maybe June is January where we start going up significantly again. So kind kind of same sentiment that I'm feeling here from these types of comments, which, you know, is totally understandable. And you know, people who might be in their first cycle and maybe weren't there at the beginning of days of Hex, right? They can feel disillusioned. But yeah, I would say, you know, go back to why you got in this thing in the first place. And it was just like, because everybody else was doing it, then yeah, probably not the right community.
Yeah, I'll go in a different angle, obviously, which is basically it's just out of envy, really. I mean, that's what's happening right now. I mean, people look at Solana, they look at Phantom, they look at AVAX, they look at other things, and they've seen that those things are up in their charts and stuff, and they're moving. But I mean, relatively speaking, we're still multiple X's. It's just like expectations were set extremely high. Not by Richard himself, but more like by the community of getting really crazy. And I would say even it's mostly from the PulseX stack where people were acting pretty crazy and saying crazy things. I remember a couple of people on Twitter saying they maxed out credit cards, and I was like, God damn. Wow. No, but it was true. I mean, that's what people did. I mean, no one told them to do that, but, you know, this is why at the beginning of my show, I have at the end of the day, you push the green, you push the red button. You got to be responsible for the decisions you do. But obviously that isn't a characteristic of people, some people in the crypto space. It's something that me and Charlie impart on all our students and stuff through the red pill. But, you know, we're the red pill of finance. You know, we don't push, you know, you don't have to, you know, get into the red pill, but we like to teach there's certain good qualities of the red pill that are really great for life overall and stuff like that. And that's
it boils down to what is the metaphor. The metaphor is going to the truth, whether you like it or not.
Yeah.
Right. And yeah, you just need to kind of, you know, understand, like, you know, markets work like this and people are going to get shaken out, but people are going to make the stupid decisions. But yeah.
And right now we're getting what every other one's not running right now. What is every one plagued with? Meme coins. What is PulseChain going through? We're like the last ones to get the meme coin run, and we got the meme coin run. Like 9inch is doing really well. Ben just launched. The ecosystem is doing fantastic. It's just and then what you want to know? One of the reasons why we've had 8 weekly candles of red is because people have been selling 8 weeks of their main holdings into shit coins. That's what's happening, but that's normal. Look, you can actually look at other ones. The main difference is that we don't have an exchange listings where people, casual buyers, can just hold up the price of the token. So since we're a DeFi only coin, it takes a lot more steps to get into PulseChain. So then when the DeFi users are then selling their DeFi coins to buy DeFi shit coins, that affects the DeFi coin, right? Where like when you have, if we had a Coinbase listing, new people coming to the ecosystem, hey, just get on Coinbase. Okay, I'll hold some PulseChain. That would hold the price up, and then the meme coins would still run, and people would feel a little better.
Yeah, and also you're going to have, if you have something listed on a centralized exchange, usually you're going to pay for a listing to some extent, and if you're going to do that, then you're also going to pay market makers also to hold up the price during dumps, which you're not going to have as much in DeFi.
Yeah, look up Jump Capital. Look up Jump Capital. They're the biggest market maker in this game right now.
Oh. But and the people too. I mean, there's plenty of people who just sold their core coins to get into whatever else for the narratives that are happening and otherwise. But the people who have left completely, they would just exit the ecosystem. What did they have in common? What would just make people just no? I'm just going to go somewhere else.
Well, I would say, like Miguel mentioned earlier, maybe over leveraged in either allocation to the coin or in, mainly that. Like, and it could be over allocation in actual leverage, or just they took too much out of their own personal savings for that, because hey, it's the next 100x moonshot. It's going to happen tomorrow.
I mean, I especially when I remember this, when I was coming up in the crypto space, that sometimes I over DCA'd. It happens. And then I'm like, something happens in the real life because I'm living on a razor's edge because I'm trying to ape as much freaking capital as possible in order to leverage this to change my life, which it did, right? But there's times where I'm like, dang it, I have to sell a portion of my position because something happened, a car broke, or I need equipment or something. Just life happens. But it kind of is what it is. You have some people where they basically didn't DCA at all at the bottom, and or just selling off positions because they're trying to make it back on other coins. If you were DCAing, if you lowered your cost, I mean, for anyone who's signed for PulseChain is pretty much we're in profit. I mean, basically in the entire time, especially if you're a part of a SAC group or a top 20 SAC group or whatever, you're still in profit right now. But if a person who just solo SAC by themselves, they're down 30%.
Well, there's a lot of people who's sacked like
perfectly fine.
Yeah.
I was thinking of too, just people who sacked. A lot of people sacked, like $1,000, just smaller amounts relative to probably what they have in crypto. They waited a while. They, PulseChain came out, and then you think a lot of them bought more before, we had the opportunity to buy all the dips, and that's why it's like, oh man, I was so excited this thing came out. I turned a bunch of more ETH or whatever into it, and now I just saw it go down instead of waiting and then buying the dips. Do you think some people are in that kind of situation where it's like they got kind of double hammered? I'm like, crap, I was so excited. I thought this was going to work out.
Yeah. People FOMO'd. People definitely FOMO'd. I mean, we told our guys, if you wanted to buy some off when it just launches, but if it goes through God candle, green candles, you don't buy green candles, so that's just kind of what it is there. But yeah, like the prices. I mean, that's what happened, because once we got above SAC rate, I mean, there's a reason the price got to 340. It wasn't the guys buying at 10 or at 100. There's people buying on the way up, right? So that's obviously what happened. And there was a bunch of pent up demand because people wanted that to happen, right? But I mean, it's kind of due for the course, because we launched in a bear run. We launched in the middle of the bear run, and I actually think that's over. I mean, we're going to look back and probably be like, that was pretty cool, but it's been a bumpy ride, obviously, because no matter what, any coin, if you look at the price charts of most coins that launched during that time or in 2022, it's terrible. It's like,
yeah,
but we're off the bottoms now, I mean, even right now on PulseX, we're still up 3x from the bottom. I think PulseChain, we're up like 2.5 and some change X from the bottom, give or take. So we're still doing pretty well on that front. I mean, you could be Cardano and be up like 20% or 50% from the bottom. You could be XRP and be at neutral, no gains at all.
Look, one day the banks are going to adopt it. Okay, why are you funding the narrative? It's been a long time. I remember when they delisted XRP from Poloniex. I remember like back then, and they had the chat and all that stuff too. That was interesting times. But urban production, a whole lot of blabber. Are we going to moon or not? It kind of ties into with the Ethereum. So,
well,
do you guys think that maybe tie that in?
First of all, I'd recommend some Q-tips, but hey.
Where does the Ethereum ETF is PulseChain leverage on Ethereum? Is that like people in PulseChain right now? They're like, okay, Ethereum ETF, maybe we get it May, June, July, August. So it sounds like August is what we talked about earlier. Does that leading up to that? Maybe people are buying it, maybe not, whatever. But once we get there, and then whatever happens with the SAC funds, all that stuff happening, but just. Is PulseChain that leverage? Are we just waiting on it? I mean, are you guys waiting on Ethereum to see this ecosystem flourish, or is it? Do we need that to happen?
We don't need it to happen, but basically, it's going to be one of the big catalysts and stuff. Mm-hmm. I mean, it's not a mystery. I mean, I don't know who controls it. OA, who are SAC funds or whatever, but most of them are converted into Ethereum and are still sitting at Ethereum right now. That's for a reason. And, you also have this whole thing where it's a wealth effect, because PulseChains have been cheating and buying other coins and other ecosystems. I don't know how that's possible, because they're supposed to stay faithful to me, but somehow, some way, Bitcoiners own Ethereum. They never say they're closeted Bitcoin. I mean, we said this last time we were I think we were on your show. We were here at the Miami event, the Bitcoin Miami event, and I didn't have a single Bitcoiner ask me about Bitcoin. They were just talking to me about PulseChain or shitcoins the entire time. Like, we're at a Bitcoin event, you would think someone would try to get me to buy Bitcoin. Strange, right? So it's just the sort of thing where like everyone's a closeted altcoiner, whether they want to admit it or not to their people. And when Ethereum moves, that starts moving L1s and L2 prices up dramatically, because our poker chips have now increased in value, and now people can borrow more money. People who borrowed money at those large levels now can repay back those loans, or decide to like, oh wow, I can need to take more out, and that puts like both a healthy and unhealthy amount of money in terms of leverage back into the system, and then your L1s and L2s will start going up substantially, and people who own money outside the ecosystem like, damn, PulseChain's looking cheap, or or maybe the OA itself just starts buying a PulseChain or incentive token and stuff just to increase the price. But it's kind of like this whole three-pronged sort of attack where, because all the poker chips in the game go up in dollar value, it rises all boats. And then from there, you end up having kind of seasons, because, I mean, people were complaining in PulseChain that, like, during Q4 of 2023, that PulseChain wasn't doing much. And as soon as January 1st came around, we had a huge run up and stuff on PulseChain and on PulseX and stuff. Finally, everyone happy. Yay, no more poor. I was always right. Yes, you see, this is why we're the best chain on the planet. And then we've come down a little bit, but we're still higher than what we were, because we were at 9 on PulseX. We're at 33, 31 on PulseChain. Ink token was 30 cents. I can keep going. Everything was at all-time lows. BBC down to 1 inch. I mean, you know, everything was down bad, right? And then boom, now we're higher than we were before. This is just part of the course and stuff. It's just, there's some new people to the space, because just new people to the space, as well as it's just patience, you know. I mean, imagine if you were trading or investing in equities. I mean, you'd basically go insane.
Yeah. And like Richard Hart also, you know, he put out the trend line and the trend line broke. Oh my God, you know, and it's one of these things where it's like, in terms of narrative, right? In order to hold up certain areas of price, you have to have consistent narrative, meaning you have to have more media exposure for Richard.
Is this, you think PulseChain will be, you know, what happened with ETH in Hex? So Hex, you know, ETH was going up, benefited from that too. Do you think we'll have the same kind of play with this, where it's like, okay, ETH is going up, PulseChain is going to, regardless of whatever else happens or whoever buys or whatever else and all that stuff too, just the whole, you know, as DCC said, the rising tide lifts all boats. Is everything just a play on ETH at this point?
No.
And well, I would say partially, right? So like play on Bitcoin, ETH, and Solana.
Yeah.
So, you know, like just going back to like kind of how money flows in crypto, right? It always flows from the top caps to the lower caps. Doesn't mean PulseChain is going to be exactly correlated with them, just like Bitcoin is not going to be exactly correlated with traditional markets like the S&P 500 or anything else. But you will see, you know, Bitcoin does well first. Great. Then all of a sudden the altcoins are like, okay, maybe we're going to move, right? And then Ethereum says, oh no, I'm moving now. And then when Ethereum moves, the altcoins all of a sudden be like, oh shit, we're moving too, you know. And then Solana is one of the first movers of altcoins. If people are like making a lot of money there, they'll also take those profits and bring them into other chains. Base protocol is probably the first one after that that's getting a lot of play in terms of rotation. So you do have these rotating assets of coins, you know, coming through the altcoins, but it doesn't mean that's 100% of the capital that's going to come into PulseChain, because PulseChain really doesn't have as much outside capital coming in, maybe as like Base Protocol or these other larger, better advertised ones. So for PulseChain, it does rely a little bit more on, you know, kind of the people who are already in the chain, and then those people organically talking to other people. And so, you know, if you have the amount of negativity that you have currently in the market for this particular chain, then you're going to have less, it's going to attract a lot less capital that does that rotation, or a lot less capital that actually, you know, is related to the people who are already in the space. So
that the sledgehammer keep hitting your own hand type of thing.
Yeah, right. Exactly.
Advertising.
Yeah, exactly. And so, you know, that's why like videos, you know, that basically just say, hey, this is all going to zero. You know, it's becoming like a Peter Schiff type character of the space, like doesn't really make much sense, right? So yeah, I think once you get enough movement, like once the movement's so obvious in other parts of crypto, people in this space then all of a sudden be like, okay, Pulse is cheap and it hasn't pumped yet, so okay, they start getting a little bit more confidence, and you know, they start going in, and that's where, you know, what DCC was saying earlier of PulseChain kind of lagging the rest of the market. You know, it had the last meme coin season, it pumped, you know, about 3 to 4 months after the rest of the market really started pumping hard. So yeah, that leg effect will continue until, right, we get into I would say like new all-time highs, because just like we saw from December to January, where all of a sudden the narrative flipped, people were like super bearish, oh, this shit sucks, to, oh my God, we were all right. You know, that only was going above the SAC rate back again, right? So what do you think happens in the sentiment shift when we go to new all-time highs? right? People are going to be like, oh shit, now time to go in. And then we probably have one more dip, go back below all-time highs into, accumulation. And then, we go crazy. So, yeah, when we get a full on alt season overall with the whole market, then that's what's going to really, I think, boost things up. But it's usually like the last year to year and a half of the bull cycle, which is where we are entering right now.
Yeah. We passed the quiet times. We're past the halvening now. So it's usually a couple of months after the halvening when things really start bubbling up now. So this is why we launched the course at this point in time, because it's such a pivotal point. The only other time where we've spent this much time kind of looking at when to launch is, we did something called the mega course, which was literally at the bottom of Bitcoin and Ethereum's prices at $15,000, $800 Ethereum. And we fused two courses together because it was such a crazy point in time, because we were trying to make sure that people didn't fumble the bag. We had 300 plus students in that one, and everyone is an extreme profit right now on everything they bought. So
if you did anything you bought at that time is up, unless you bought some shit coin that rugged and that we didn't recommend.
Yeah, it never happens, by the way. They don't go to zero. They only go up. Only as those shit coins you're talking about, I think.
Yeah, we don't.
Somebody told me.
Recommend those.
That's why. Yeah, there is a list of those. Yeah. Wallace J, what do you say to someone who argues that Arbitrum or Polygon are the same or better than PulseChain?
You kind of have to look at what's the fundamental differences between them, right? Look at supply, and how much is out versus, how much is going to be coming out in the future. Optimism, Arbitrum, right? They still have a lot of supply that's yet to come out. So as those prices go up, they can the price actually can get kind of slowed down, right. By people selling because there's a lot of supply. But so that's one thing. Then also, what's the difference between a layer 1 and a layer 2? A layer 2 is kind of at the behest of the layer 1 it's connected to, right? In this case, Ethereum. Whereas PulseChain, although it is a copy of Ethereum, it can decide whether it copies Ethereum on any updates or whether it goes its own way. And so I think the ability to kind of do its own thing and be a lot more autonomous is a bigger strength overall, as long as people are developing on it.
You guys had conversations where people were like, hey, Arbitrum, why would I go to PulseChain? Arbitrum, obviously. Polygon, yeah, maybe, but Arbitrum, that's the place. Maybe I had discussions with people where they're like, they love some L1, and you're like, but this PulseChain thing, there's something to it, but how do you communicate that?
I mean, we how do I say it? We usually break the students down in terms of leave your preconceived notions at the door and stuff like that. This is really how things are right here. We're here to make money, right? And it's the sort of thing they could have. If you want those bags, you definitely have them. But we believe that having a bag of PulseChain is a sort of really great idea in terms of portfolio and stuff, because we have found that it's why we've been such good onboarders is basically we've onboarded with honey instead of vinegar, basically, where you don't have to be this because we'd say so. No, you don't have to. You do what you want to do, man. I'm just saying that this is what we're really hyper interested in. And then people see how passionate we are, and they're like, all right, I'll check it out. Holy shit, it looks pretty cool. But we also tell them to make other plays, and then we teach them that there's a rotation game. Now, it doesn't sometimes especially with our ecosystem, how it is, it's truly a DeFi coin in terms of an ecosystem. You sometimes don't think you're a part of the rotation, but there is a large capital rotation that happens. It might be just money from one ecosystem it could be maybe BNB money rotating in, or it could be more or less just because everyone's secretly in other coins without saying, and then those coins go up a lot, and they're like, damn, and they feel a wealth effect, and they bring capital into PulseChain, which then starts dragging the prices up. It could be one or two big whales that make a ton of money on BNB, or on Solana or this, and then saying let me boost up, because this is something I would do too. I mean, if I made a shit ton of money, if I had tens of millions of dollars, and I'm like, well, all right, let me allocate $5 million over here to this side of my portfolio into this, because it hasn't pumped yet, because I know it's going to pump at some point, and it's just wealth begets wealth is kind of what happens and stuff. So there's a lot of that's also why once money flows out of this ecosystem, it usually comes down because these whales and these other people took profits still higher than where they left them and stuff, and then money rotates. This rotation game becomes quite more apparent the later you get into the cycles and stuff. Like during the last 3 months of the last bull run, I mean, it was so apparent. Literally, it's like, oh, the capital came in, boom, boom, boom. It was literally just one right after the other. Like, 3 weeks of like massive pumps, and then it would just continue on, and then it just rotate back like this. And sometimes you could tell that there was like some large whales that were running like a 5L1 sort of like chain gang essentially, and other ones where they were in these. And I'm serious, yeah. I mean,
yeah, and they were the ones who, one of them may be still looking at not getting extradited.
Yeah. I mean, there was acronyms and stuff like phone and stuff, which is like Phantom, Harmony, Arbitrum, and all these other ones and stuff. So they would make, just like we have FANG stocks, the Nifty 50s back in the 50s, like you would have all these names, you'd have the names for all these, sort of mags, which is in now and stuff like that. So it just ends up as soon as they can put some acronym on it and stuff for a trade, then people start doing that and stuff. So, a lot of copy trading going on, but regardless or not, it is at the end of the day, I love using this in the classes is like poker chips. Like right now we're playing with $5 poker chips. And then after a year, they're $100 poker chips, and people will still be playing around on the table, putting it to like, as an example, right? Like,
they'll still think they're like $5 or $10 poker chips.
Yeah.
Playing with hundreds.
I caught myself doing this, man. I was telling Charlie, like, I put $10,000 in the pet, and then I was like, no, I didn't. I put way more than that. Oh shit!
Because we're cultivating crypto, right? We're looking at denominations of Ethereum, and whatever other L1 we're playing with, right? Rather than necessarily the dollar amounts.
Yeah, because I was like,
which does keep you sane. Keep you sane.
It's this weird sort of like double-edged sword dichotomy that you have, where it's like it's both good and bad. Because sometimes this is why people during the bull runs lose themselves and forget where they were. This is why I had that aha moment one day when I've told the yacht story like a million times. Like I was on a yacht here in Miami with a bunch of like Hex guys. And then I was like, we are having way too much fun right now. I'm on a yacht with a bunch of a bunch of chicks and dudes right now. Whoa, hold up. We're supposed to be in the door. We're supposed to be in a dark basement somewhere on our laptops. And it's a self-realization and stuff. Just like you forget. I mean, that it's really apparent when you look. I mean, everyone knows this now, but like when everyone was doing Hex Flex.
Yeah, well, Hexflex was that was like one of the most obvious sentiment signals. Yeah, for sure.
That was a period of time. Yeah,
the best time, I will say. That was so fun.
There was a lot of fun. I mean, back then I wasn't active on social media, but just watching, and I remember watching all the Hexologist streams back then and stuff too, and it was just like, man, it's a lot of fun happening, and then boom, 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 and but PulseChain launched, and then boom, boom, oh wow, no, we're okay, and then okay, well maybe we'll see.
Yeah. We figured out sort of like the this is thanks, I got to give a shout out to Fresh and Fit. He kept mentioning to me, he keeps seeing these NFT guys and they keep getting younger and younger, and then when we went one day and I was like, oh my god. But the thing is, at the time I had no NFTs to sell, so it was kind of just these indicators of like where we're at in the cycle, because it was like they went from being like these 28 30-year-old guys to there's 18 barely 21-year-olds in the club and stuff. You just kept getting younger and younger and younger, and the projects were kind of scammier and scammier and scammier. It's kind of, and that's kind of exactly what happened during like the 1920s and stuff, where they kept borrowing, like they just kept leveraging until there was no more. They just I forgot the prop houses or stuff. Basically the stock houses wouldn't just lend them any more money. They were tapped out on leverage, basically.
And that's when they banned alcohol.
Yeah.
Imagine the speakeasies. Yeah. So yeah. By the way, when I say maybe things are okay, I'm saying this in the terms of, if you aren't bullish on what you've heard in the stream so far, and the 500 other streams, I have to look how many streams I did so far. Most of them have been bullish or pragmatic and pragmatic optimism of some way as well. Maybe, however, just look a little deeper in what we're saying. And again, the courses stuff too, up at the link here in the description, and we'll end here in a minute. But just to maybe the last question here too, just Man, you got me thinking about the Ethereum ETF now. I've had it on my mind the entire time. Kind of excited to see what's going to happen with it, but PulseChain in general, DCC said, maybe we're not we don't have, we're not completely reliant on the ETF. In the next couple months, like what's in store for PulseChain? Like what's exciting to you guys? Like what's there to be optimistic about?
I think price is going to be up. Basically, price is going to be up more and more. I mean, I'm really proud of the community. They're starting to launch more projects. I'm really proud of, even though people kind of shit on all these meme coins and stuff like this. This is not just a PulseChain only thing that we're the den of thieves and scoundrels and only the worst kind of people launch meme coins and all this stuff. No, this is how innovation's done. Some people will probably make money through these meme coins and doing all this stuff and decide to launch like real solid projects or launch something that can maybe possibly go viral and stuff like that. I mean, a lot of good's going to be done. Like you have to sift. I mean, it's kind of numbers game. It's same thing with if we never had the ICO boom in the 2017 cycle, we never would have got Ethereum because people weren't taking shots and stuff like that. If you even to go lower that, if during the 2013-14 cycle, if people weren't making dark coin and color coin and tree coin and all these other dumb coins that just made no sense, you never would have had the sort of environment where people were taking shots on dumb projects to ICO Ethereum or ICO all these things, and then from there. Because of the whole ICO boom that happened in 2017, you had the birth of like Phantom and a bunch of these other things, and you had so many people on Ethereum make money that you had Uniswap and all these things come out, and then from there, the birth of this stuff we never would have had, Hex, So it's kind of like all this stuff, these very large scale sort of like hype events end up creating innovation. There's going to be a lot of destruction and like loss of capital for some people and a lot of wealth created from other. But if you don't have these huge ICO, I'll call them ICO booms as an example. ICO booms, you don't have innovation, and you need that. So I'm pretty stoked for what PulseChain's future.
Take 100 coding monkeys, put them in a room long enough, they'll eventually write Shakespeare, right? But on chain. So, you 95% of crypto projects throughout the entire cryptocurrency ecosystem per se, right? Or the Bitcoin ecosystem, as the maxis would say, 95% of coins suck, right? And have no utility and are just, there for pump and dumps and stuff. So how much innovation do you need? You need a lot, right? You need a lot of people trying a lot of different things. So what DCC said there is exactly correct. And we hear rumblings, hear rumors in the background of stuff, let's say over the next 6 months that people are building, people are looking to deploy and play around with in the technology. I think what Maddie's trying to do with his project and everything, kind of his evolution of Time Pays Me, is very, very interesting. Now, it's a technology that, kind of like smart contracts. Do people know how to use it right away? Or like NFTs, are people going to know the best utility for it right away? Maybe not. But, you give them a cycle or so to play around with it. Then all of a sudden they might create really innovative things and it's really useful. But, people might not see it right away. So, I think there's a lot of stuff that the community is continuing to build. So the more people that, continue to do that and continue to put olive branches out there to devs from other ecosystems being like, hey, look there's a bunch of liquidity here. You want some? However you can get the devs from other areas interested, I think the better. And, we see Cardano launching a game on Gala chain. We see, Avalanche working with a bunch of different ecosystems and having a lot of cross-chain collaboration. So, people in PulseChain should start reaching out to, AVAX people, Phantom people, base people, and be like, hey, let's do a collab here because copy paste. This is Ethereum over here. It's not that difficult to bring some of your innovations over here. And then, we can, you have to kind of broker some of those types of deals if, you want kind of development power from other ecosystems too.
Also, your coins are here, the P copies. So we'll see what happens with those going forward. It'll be interesting.
Yeah, at the very least, you can pump and dump those, use that for a little extra capital to help your project. being honest.
Have you switched your wallet to PulseChain to see?
And then,
to see
and then come out with the real token on PulseChain that would represent, your thing, because they're going to want a little bit more control than that, right?
Or wrap version, maybe they could do like they launched on PulseChain, they could just say, oh, you can use it. We accept the wrap version. You can use it on or something. I don't know.
Yep.
Interesting. Gents, always good to see you guys. Always love the conversation we had during the conference as well. That was a really cool stream. The place was rocking back then, and appreciate you guys having me on, and the other gentlemen. That was one of my favorite streams by far. You guys got an amazing.
Let me know when you come back to Vegas, man. We'll love to have you again, man.
Yeah, come to
I definitely will. You guys were awesome, awesome hosts. Like not just hosts for the stream, like hosts, like you like embodied the host. Wow, let's go talk about some cool stuff. It was really fun to hang out. Speaking of that, though, courses stuff. Tell people and remind them why this is strategically timed. I think that's important too. Just for a moment when we wrap up here, what is the course, real quick, for people unfamiliar, and like why is it being timed now?
Okay, I'll give them the too long didn't read, quick A to Z of what it is and everything. So the crypto mindset course is the longest running, best quality course in all of cryptocurrency. We've helped over 16,000 people basically onboard into the crypto space and or improve their crypto journey over time. So we have people who've taken up to 13, 14 courses. We've had people that have taken 10 in a row. They use it as an insurance policy and also a way to basically keep up to date with the latest information in crypto. And then also, so I would say, probably the three biggest use cases that I've seen people use it for is insurance policy, to make sure they're understanding the information in the market correctly. Two, to get some the most recent updates in the market, all the alpha and because as we go into the bull market, the news cycle moves a lot faster. And then three, as a foundational entry into the crypto space and or an additional foundational information that maybe is missing in your lexicon, right? Maybe fundamental analysis, but you have no idea what technical analysis is, and you think it's astrology for men or something, right? And or you don't know what on-chain data is, and you think like you need like a huge team, whereas maybe you can leverage AI for that or something, right? So there's a lot of different things that you can learn in the course, and we cover it all. We do risk management as well. Maybe you're just a degen out there that needs some sanity talking to them, and we keep you from taking that extra loan and from the Italian mob or whatever, right? So all these different things is what we provide, and also we like to give it an entertaining format. So we play music, we have fun with you guys, and it's kind of like a boot camp but summer camp at the same time. So we kick your ass with information, make sure you learn something, but we have a good time while we're doing it. So that's what it is in terms of what you get and what you can expect from the process. If you do decide to join and level up a portion of your crypto journey, and also to network with a like-minded group of people that's adjacent to the Pulse and Hexagon community. Basically what you do is you go over to that website there, cultivatecrypto.com/shop, jump into the crypto mindset for Q2. It's $9.98 if you pay by GPay, Apple Pay, credit card, debit card, all of those things. You can also pay by Ethereum or Bitcoin. In the description, there's an example, or there's instructions. There's instructions on how you can complete that. You do get 15% off if you do that. So it's $847.30 if you decide to pay in crypto. But once you do that, you'll get an email from us within 24 hours from either Charlie at cultivatecrypto.com or support@cultivatecrypto.com, giving you a link to jump into our Telegram group. And then there you basically enjoy with the other 200 plus people who've already joined. You can enjoy talking about crypto and seeing a few pre-recorded webinars between now and May 10th. There are 5 pre-recorded webinars, 15 live. On May 10th, we start the 15 live webinars. We have guests from other areas of crypto, including Illuvium, Aerodrome, and Phantom ecosystems. So we also discuss heavily in the PulseChain ecosystem and have a couple webinars dedicated to that with guests from that ecosystem. We had RHMax in on a webinar about validators and staking in the last course. So that was awesome. Cool. And we might actually have more than 15 live webinars just because we have so much content this quarter. Yeah. And then after the webinar is complete, which is about 2.5 weeks later, so I'd say the 25th of May, we do 2 days on, 2 days off, right? Where we do 10 a.m. Eastern, 10 p.m. Eastern for basically 2 days in a row. And then we take 2 days off as break. And we do that throughout that 2.5 week period. But then once we're finished, throughout the rest of the quarter and potentially into the Q3 as well, We basically give other flash webinars every once in a while, a couple here and there, to keep you guys up to date with the market. We keep engaged with the chat. But the beautiful thing is we never take any of the information away from you. You can keep all the recorded webinars, which come out about 12 to 16 hours after each live webinar that we do. The recording comes out. You have access to that forever. So you can do spaced repetition over time. And then basically, we never take the chats away from you as well. So you can stay in the chats and keep the network active throughout the bull market. So what we see people do is they have, the chat group from each quarter that they're in, and they're like, okay, what's the sentiment over here? Okay, I know this group, kind of was top buyers. So what are people thinking over here? They go ask that chat, and then they go to the other chat, and they're like, okay, these guys are the bottom buyers. What are people doing over here? And they kind of, can play with a couple of different chats just to kind of see what different segments of the market are thinking based on when they got in. So there's a lot of aspects to it that I think are very helpful. But did I miss anything?
I mean, you sure covered it and stuff. But yeah, there's a lot of psychology going on, and then that's also another thing that we teach our guys, just kind of how to use FOMO and how not to use FOMO, basically, and ways to just keep themselves safe. A big thing we've been pushing is condom wallets. You've seen the string of hacks that have been going on. Condom wallets is another way of saying just basically not having all your keys on just one wallet. You would have your coins split amongst many wallets, and you would have certain wallets where there would be as an example, if I have a Trezor, right, and I got my Ethereum in my Trezor, that Trezor has never connected even to Uniswap or anything. That wallet's basically there as a bank vault. That all it's going to do is, if I want to do anything within DeFi, I have to send Ethereum to a condom wallet that actually interacts with those sort of things. And then there you go, the security app. Yep. So a lot of security here and stuff like that. But it's crazy that this is why we push this so much, because this is not people are not actively looking at this. Or I've met so many people, OGs, who have every single dollar on one wallet. They do everything on one wallet. Everything. They're surfing the web. They don't have dedicated. You don't have to go crazy. We do layer it in a way where, if you're starting off, you can keep it really simple. And obviously, as things progress, it becomes a little more complex. But you have more money, and you're running a more sophisticated operation, because you're playing around thousands, and now you have a multi-million-dollar portfolio. You move different at a multi-million-dollar portfolio. But we show guys from the smallest guy all the way to the biggest guy how to kind of move in the space, how to stay safe. And I'm really happy to say that our guys have one of the least amount of incidents to happen out of any crypto group or any basically just group in general, because we've taught our guys how to stay safe. And that's one of the biggest things, because it's usually calamity happens is that this happened to me a couple of years ago. It happens even to the best of us. I accidentally send coins to the wrong address. Oops, don't know how that happened. There's 16,000 and gone.
Tired that day.
Well, there's trillions of addresses, so it's not that crazy. Yeah, I'm glad you guys are talking about that. Every time I see somebody on Twitter that's like, I lost all my money, I'm like, man. Yeah. It's like, even if you all your judgment, all the time, everything you spent getting up to this point of not losing it yet, and then it's not even, you just slip up some way, connect to some random website or whatever. I'm glad you guys are talking about that, because that's something that it's always heartbreaking to see people who they have this fair shot to make all this wealth, and it's like, just got it stolen. It goes, it sucks. So glad you guys are covering that. And
people have called me paranoid, but this paranoia has helped me a lot.
A healthy version of that, healthy version of paranoia too.
You do need that. I would say my paranoia is not crazy, but it is a lot higher than the average person, just because it has to be in crypto. It really is. If let's just say for some reason, I haven't talked to Charlie in a couple of days, and he starts sending me really weird messages with links and stuff. I'm not clicking. Hey, yo, bro, you all right? What's going on? Even with Charlie,
telling me to send all these phishing links. DCC, help!
Hey, for real, FaceTime me now. FaceTime me now. I need to that's those kind of things. Check who you're talking to is the person. No, don't click on links. There's a ton of stuff. Just easy things.
Why do we always text? You never FaceTime. Why? Big red flag in life, you guys. If a girl is texting you, not FaceTiming you, bro.
Funny. All right, gents. Again, always a pleasure to have you guys on. You guys, everyone knows about the course. Talked about Ethereum ETFs. Really good conversation around that. I think that's really what I wanted to cover today. One of the most exciting things happening this summer, or not. We'll certainly see. So appreciate the commentary on that. Any final words we guys want to go out on? Going to lunch?
Yeah, we recommend everybody come over and watch us on Fresh and Fit here. What time is it right now? We're at it's almost 4 o'clock in about 3 hours.
3 hours. We'll be in Fresh and Fit. Yep.
Yeah. So come over there, support us in the chat, say go Pulse and all this stuff, help us basically spread the word there because, positivity in the chat and different things like that, go a long way in us being able to put out the word there for the PulseChain community. But then also go follow us on our socials, right? Cultivate Crypto on YouTube as well as Dollar Cost Crypto. But yeah, we're going to be jumping on your stream right after this, DCC.
Yeah, we'll be jumping on my stream in the next 30 minutes. And then from there, we'll be on Fresh and Fit. Really cool video. You should check out us on the yacht party with Fresh and Fit. Hilarious. I did not know it was going to be recorded, but apparently it was. But there also is we also did a live in-person event and stuff. I think there was like a few hundred people there, and we were on the stage with Wes Watson, Bando. It was a really cool event. Did not think I'd see Charlie with Bando Kevin, but there we are. There's Charlie.
Yeah, we're gonna see both of us with a lot of variety of people throughout the bull market and throughout the rest of the decade as crypto gets more mass adoption, baby.
Yeah, and I'll send you the link as well as soon as it's up right now because
I didn't see it on there. I was like, oh crap, that's the old one, but the old one's got a really cool thumbnail too. That's pretty sweet.
Oh yeah. No, they have great thumbnails and stuff. With the team there is really really good.
So professional.
Yeah, but the thing is, like Myron's kind of like me and Charlie. We're kind of nocturnal guys and stuff like that. So he does all his workouts in the night and stuff. So he kind of sleeps in most of the day and then wakes up to do his job, which is Fresh and Fit and stuff. So it's kind of what it is.
Very, very cool. Yeah, that's a show. I always remember Richard being on there. Funding Jim. I think were you on that one, DCC?
Yeah,
as well.
That's
the one.
I recorded Richard on the stripper pole. That was me.
That was you. That was that.
Yeah, the amount of background work that DCC and I have done. It's gotten realized, I would say, over the last maybe 6 months or so. But yeah, we've done a lot of ninja work in the background. We're still doing ninja work in the background, but hey, I don't know, maybe not. I'm not saying nothing.
Wow, that's super cool. I'm glad you guys are going on there today, and yeah, I'm definitely going to tune in and try to be in the chat. And the link should be out soon. Yeah, check out DC. Yeah, at Dollar Cost Crypto, no O on the end of it on Twitter. I'm sure he's going to tweet out the link and stuff, and then cultivatecrypto.com. And definitely going to tune in. Bring some positivity. Bring some. Are you guys going to talk about crypto or PulseChain or what's the topics?
No.
Are you sure?
None of it.
None of that. Okay. None of that nerd stuff. Okay. Other ways to get rich.
304 stream. That's all we're talking about.
304. Okay. That sounds good.
Yeah, definitely.
All right, guys. I'm glad we get a crypto stream in with you today. And that's all we got for you, everyone. Scivive and 5555. We are out.